this is a good point in time, I think, to kind of reflect on the last 12 months, but also to look forward to see how needs are changing and how the advisory and financing community can best serve those. So I'm going to bring up on screen just a few slides to kind of tee up our discussion this morning, and then I'll invite our panel to kind of give their reflections on some of these issues. So I think we know from kind of reading the recent headlines in the last week or so that as we're starting to ease out of lockdown, I think certainly the kind of politicians are betting that is going to help stimulate a significant economic recovery. We've seen certainly over the last week as retail footfall is increasing, things are beginning to kind of go back to some degree where they were pre-pandemic, although we're not quite there yet. Similarly, in terms of the GDP forecast or figures, sorry, for February, we've seen a slight uptick there, obviously following a couple of months of very difficult figures during the lockdown over Christmas and the start of 2021. And we've also seen that many businesses have been able to weather the course during the last 12 months, often as a result of the COVID loans and other forms of government support. So it feels like 12, 13 months into the pandemic, we're at now quite an interesting tipping point. Will it be foot on the gas, all steam ahead for this recovery, or are more difficult conditions set to remain for some time to come? Well, the research that we've done, we do a quarterly barometer looking at the kind of needs, sentiment, what's going on amongst British business. The most recent wave of that being completed in Q1 this year. And what we're very much seeing is growth is coming back onto the agenda. So we ask companies about their strategic priorities, and we very much see that growth balanced alongside efficiency are the two drivers that we know many businesses are looking at the moment, how they can stimulate that recovery in their business as they return to operating a degree of normality, obviously growing the revenue, but at the same time looking at maintaining or reducing costs, maintaining efficiency, many of whom have had to move on to kind of digital ways of working and engaging with customers over the last 12 months. What does that mean then in terms of the advisory community? Well, I think generally good news. So we asked people about their anticipated spending on external advice, and we see very much that people do see an increased need for spending with their external advisors during this time. Nearly 4 in 10 anticipating an increase of some level over the next budget period. And that's very much reflective of what we've seen over the last 12 months, is that there has been a significant need to draw on external support as businesses are weathering not only challenges related to COVID, but some of the other bigger issues, noticeably Brexit as well. And that in and of itself is reflected in the areas where we know that businesses currently are prioritising their need for external support. So in the research, again, we asked people where they thought that increased spend would likely be, and there's a kind of cluster of a whole range of issues here, but we can very much draw some trends. Continued need for compliance and regulatory support, particularly related to aspects to do with Brexit, cross-border trade, tax and tariff implications there. But also we're seeing very much a need around strategic and operational support related to COVID recovery, how to very much grow the business after a very difficult 12 months. And what I wanted to do was just leave you with a kind of positive thought before we move on to our panel, is that over the last 12 months, our research definitely suggests that advisors have been perceived to perform pretty well. The sentiment is that they've certainly risen up to the challenge presented by the disruption, the difficulty of engaging. So we see that 2/3 suggest that their advisors have continued to provide really great client service throughout the crisis of the last 12 months. I think that's very good news for us all. We can give ourselves a pat on the back there, but that's obviously not to be complacent, because what we do also see is that half feel that they've actually received less value for money. So although the level of support has been good, the move towards virtual ways of working, less face time, less regular contact, without necessarily any reduction in fees being paid, has possibly upset some of that equilibrium around how people are assessing value for money at this time. Similarly, we've seen looking forward that I suspect a level of virtual engagement with advisors is going to continue to be the norm. Nearly 3/4 of those surveyed suggest that they would be increasingly comfortable accessing services, certainly kind of routine regulatory compliance-based services online. And if that became the norm, they'd be comfortable with that. But that does mean some fundamental changes. So again, 2/3 suggesting that COVID has presented some challenges in the way they work with advisors, most notably around the audit and other forms of engagement. And many, again, 3/4 suggesting that COVID will mean a new set of skills is required for the way that clients work with their advisors going forward. So I think lots to pick out there. General sense of kind of growing optimism, a need for support to return to growth, but very much a kind of changed way of working with the advisory community there. So what does that all mean? Well, Simon, Charlotte, Jonathan, thank you for joining us to pick apart some of that. I think, Simon, I wanted to come to you first because I think aviation and travel has obviously been a industry that's been very hard hit over the last 12 months for obvious reasons. But I know from your business, it's very much an experience of two halves, if you like. What's been the experience of the last 12 months for you?
Morning, everyone. Yeah, it really has. We're part of a larger group of companies which is headquartered in Los Angeles, and we have a US-based business, an Australian-based business, and a European one, and they're all faring extremely differently. I mean, the US is hardly down on numbers at all, whereas the UK is between 50 and 60% down. And combined with the general difficulties that aviation has suffered over the last 12 months, Brexit is giving us some, even harder difficulties to deal with. So, from a UK perspective, we've got Brexit, we've got COVID, and the fact that almost everything we do now is an export, and that's really proving to be very difficult to handle. So. Across those three regions, we're seeing very different results, and it's putting pressure on all areas.
And what's been your experience of working with auditors and external advisors during this time? Do you feel they've risen to the challenge?
Yes, I mean, it's been harder for them as well as being harder for us. A remote audit is difficult in any period, but we're also working with auditors in the US as well, and so there's slight differences in the accounting procedures that you get in any case, and more issues in the UK about going concern that we've found. So going concern, really, we had extensions to our submitting our accounts and requiring letters of support from the parent company in terms of not having cash repatriated from the UK, which could possibly cause issues. Our audit felt like it went for 12 months rather than being a shorter thing. So it's been extremely difficult.
Mm-hmm. And Charlotte, I saw you nodding along to what Simon was saying there. How much of that kind of reflects your experience? I know you work with a wide variety of sectors.
Yeah, absolutely. Good morning, everybody. I mean, Simon, I absolutely agree. So on the other side of the fence, if you like, we offer an auditing service to a sister company because of the independence and so on. But we've obviously then been assisting the clients such as yourself to prepare information for the audit, and it has been torturous. My goodness, the toing and the froing. And whilst we all appreciate the auditors and the regulatory environment they are in, and obviously the pressures they are under, the letters of support and the incessant detail. The problem, I suppose, particularly in your sector, actually, is there are so many unknowns. What are we actually saying? Is the business viable or not? Who knows? Of course, we hope it is, and we anticipate it is, and everyone's working towards the same goal that it is. But where that leaves it, the regulatory requirements have become very different. And of course, a few high-profile business failures and a few hanging that on the peg relating to the audit makes it all worse.
Yeah, and I would just add to that it's been extremely difficult because we're being asked for longer term forecasts and cash flows.
Mhm.
And now in the aviation industry, if you'd have done a cash flow forecast in early December, it would have looked very different to the one you did in January after, it became illegal to travel outside the UK. So it changes all the time. And whilst we do those updates, it's a continual drain on the management time. And frankly, we have half the number of employees now that we did 12 months ago. So there's it really does become very burdensome.
Mm-hmm. And Charlotte, in terms of the kind of portfolio of businesses that you advise and you look after, I mean, can you draw any kind of lessons around, the experience of the last 12 months, or is it very different, horses for courses, sector by sector?
I think there's a vast difference between various sectors, as you would anticipate. So, I mean, obviously, you've got the sectors that have been most hard hit, obviously, aviation being one, but the retail, leisure, hospitality has been incredibly difficult for them. So, I think the idea of forecasting and planning, there is only so much innovation some of those businesses can actually do. I mean, I suppose with retail, obviously, there's the move to online and things like that, but some of them need the footfall. On the hospitality side, leisure, events planning, all of those things. I'm reading this morning that there's cancellation of events where there's no insurance available. It's just so difficult to predict for them where they're going. And I suppose what I always take heart from is these businesses were strong before. If they've been through the previous recession, 2007 and 8, they're even stronger because they've already been in sectors that some financiers have pulled out of. If they're still standing, they will be strong when they get going again. But how they bridge that period, and of course, how long the period is the key. But the confidence that's coming out now does seem to be really vital. And of course, dealing with the entrepreneurial types all the time, there's that strong desire to get back. You don't want to be sitting around. Get going. It's all that. So it's now how that growth reoccurs. And there's so much pent up desire on the entrepreneurial side, just waiting for those opportunities.
Mm-hmm. And we saw a kind of FT headline in the slides there about a large proportion of businesses relying on the kind of COVID funding, the government support. What's your sense? Has that kind of artificially inflated the confidence that you talk about? Once that that tap is turned off, is the situation going to be very different for the future?
I think it depends then on the businesses themselves. So certainly, I think in the early time of it, I think a lot of the government finance, the business bounce back loans and those types of things. I think a lot of companies took those, maybe not needing them. Perhaps they used it to pay down some higher cost finance, just to kind of rejig in informal terms their own balance sheets. Now they need to consider using that capital where they've been able to maintain it. So I think that has been a really useful thing. I think on the furloughs and that type of thing, I think that is going to be the most challenging area, because indeed demand needs to grow, jobs need to return, and that will be where the measures or not will show their strength. It's going to be very interesting to see what happens.
Mm-hmm. And Jonathan, coming to you, I know you track the market very closely in terms of the financing, the deals that are happening, and I think certainly your research, I think, is kind of definitely tapping into that sense of kind of optimism, and there is activity out there, correct?
Without a doubt. I mean, this is very much the SME end of things. So you mentioned our research. We research 2 to 20 million pound raises by UK private companies, and pre-COVID there were about 1,000 deals a year and about 5 billion being raised. The interesting thing about last year is, I think that the total year is maybe only 15% off. The worst months were 33% off, but actually that was a boom market. And in fact, and there was a bit of sort of future fund stuff coming in to pump up some numbers, so it was in a way worse than that. But I mean, the main theme was actually extraordinary continuity in the market, massively exacerbated by the ubiquity of business to business software, because obviously a lot of B2B software, and NASDAQ was up, I don't even know, sort of a month after COVID happened, or lockdown happened, you know, Nasdaq was already up. But so the tech piece has really skewed everything in that regard, which is super interesting. And I think a lot of VCs were sort of really sort of quietly, incredibly glad that where they had focused on B2B software, that their portfolios were doing okay. And what we noticed during the period is, if anything, valuations went up for those companies. And clearly the velocity, and then there are examples. We raised money for a B2B insurtech business, and I mean they basically said, you know, they just ripped it up as a result of COVID, because all the Lloyd's underwriters who aren't very online had to get online immediately. So there were some of these very interesting things coming through. I do think that there is a profound gap outside of software and technology in the venture capital market, and I think that's going to hit pretty hard, because I mean, where there's massive opportunity, people, and you know, there's some pretty good growth forecasts coming through for the UK in the near term. Fingers crossed they come through. But I mean, if they do, I think there's going to be huge demand for funding, and so we actually think the whole market's going to massively spike up. But both because of this growth in the mainstream part of the market, and the very strong underlying performance in software over the whole period.
Mm-hmm. But it sounds like, from what you're saying, that, you know, those kind of B2B software type businesses, you know, very attractive at the moment. But for the kind of broader UK PLC, you know, are those funding options available, or, you know, actually is it going to be a more challenging prospect if you've got, you know, more kind of challenging underlying financials?
Well, I mean, definitely. What happened with the growth capital environment was it was very binary. I mean, if you weren't, if you were not making money before COVID and things went less well in COVID, you couldn't get funding from a sort of, you know, you could get funding from Future Fund perhaps and your existing shareholders, but you couldn't really get funding from the VCs, which was what it was. And I think what we're going to see is but we did see all these decks immediately with this pre-COVID, post-COVID picture, and I think there's going to be an enormous amount of that kind of analysis going on. And I think the working assumption is I think Charlotte said this: if something was in good shape pre-COVID, then it's probably going to be in good shape post. I think it'll be very interesting to see how the lenders respond in terms of the track record that they go after, you know, the senior lenders, because are they going to see 12 months stability before they lend, or are they going to adjust for COVID, you know, like adjust it out once it's back? Hopefully the latter. And then I think the usual rules apply. I mean, the fact is the VCs are very choosy, whereas private equity, frankly, will back anything as long as it's got at least a couple of million of EBITDA. And just, yeah, I mean, speaking incredibly bluntly, I mean, a lot of private equity funds just don't care where it comes from as long as it's high quality earnings. Mm-hmm. And I think that all those rules are going to apply. But as I say, if anything, we see an increased demand for funding, and I think that's going to be really interesting to handle on the part of advisors. And I think advisors are going to be I think the advisory community is going to go to very high value add over this period, and I think, but it's not easy, because of course this is a live environment. No one really knows the answer. But what I think we would encourage, what we're certainly doing is we're talking to everybody to ensure that our database on the funds is up to date in terms of that, and following the deals as they come through. Because it's a lot of this is guesswork in terms of what's actually going on and what is fundable and what isn't. The main thing is to get stuff out to market and find out.
Mm-hmm. And Charlie, just kind of pick up what Jonathan was saying there about maybe some of the more traditional lenders, the banks, etc. Has what's been your experience working with, you know, your clients in terms of you know, the kinds of growth funding that they're looking to access and accessing, you know, from more traditional lenders as well?
Absolutely. I mean, the traditional lenders are, of course, always there, and many SMEs still bank with the high street banks for their day-to-day banking arrangements, and that's often the first place they will go. I definitely have experienced a significant growth in those off high street lenders coming in. They're often more flexible. There are obviously lots of online platforms and that type of thing. So I definitely think there's it seems on the ground, if you like, that there are greater scope for lenders. I think the high street banks themselves also pulled out of a lot of sectors, again referring back, but last time's recession. So you know, I don't know, the pub sector, a lot of lenders went, no, pubs are not for us, and they've rejigged that lending, pushed them aside, they've gone somewhere else. So the high street banks no longer have what they saw as quite significant exposure on those loans, and that obviously has already taken those types of businesses to look for new sources of finance. And I just wanted to come back also, Jonathan, you were talking there about the sort of software, B2B software stuff as well, and that links in with your slide at the beginning, Alastair, the idea of digital accounting. Yeah. And the idea of the numbers, if you like, because of course I would certainly say in my experience, any of these funding applications, anybody who's interested in investing in any business will be looking for the financials. And of course, digital accounting, the idea is it's more immediate, it's more, I won't say accurate, but it's more available, it's more accessible. It gives you live reporting much more than the old traditional systems would perhaps have done. And of course, the other reason just for the drive to digital accounting is HMRC are pushing us that way. You know, there's a great drive by the government to get everything online in itself, because that they hope and they imagine that will allow them to counter fraud, bridge the tax gap, and all those types of things. So digital accounting works always, but certainly, Jonathan, you presumably are finding, you know, at the end of the day, the numbers are required for any kind of application.
Yeah, absolutely. I mean, yeah. I mean, there's a lot of discussion about what numbers you actually need to raise money as an SME. But I mean, put it this way: our decks have got up to 8 slides of financial information, and the fact is, every VC goes straight to the whatever they say, they always go straight to the numbers. And it's the obsession.
And Simon, I know you were talking earlier about the kind of increased demand on, you know, management time, you know, having to you know, maybe kind of supply more information in an audit than maybe you traditionally have to do. You know, does the kind of digital engagement with advisors, does that kind of appeal to you as a way of maybe trying to reduce some of that management time ask, or is that we're not quite there yet?
No, I think the increase in management time employed on this was as a result of it being remote. That's what really drove it, and the fact we had COVID and Brexit issues, and you know, potential cash flow issues. You know, in our business, you know, back in April and May, we had a very rapid reduction in revenue, which actually had the consequence of producing lots of cash. And so the issue going forwards is, you know, assuming aviation does come out of, you know, the worst recession it's ever had, the cash is going to be the key, because, you know, there's going to be enormous demands on cash as the business winds up again. And I think that's really going to be the crux of it for us. But no, I think we always enjoyed having more efficient face-to-face meetings with auditors. It tended to go more quickly.
Interesting. For those joining us, if you've got any questions you'd like me to put to Jonathan, Charlotte, Simon, please add them into the chat, and we can try and cover those off in our final few minutes of the discussion. Just picking up on what you were saying there, Simon, in terms of, you know, getting back to some degree of kind of face-to-face normality. You know, what kinds of kind of interactions and support do you think, you know, you personally and as the business more generally, you know, will be looking for from advisors going forward? Do you think there's going to be an increased need to draw on external support, or actually do you think you'll become more kind of self-sufficient as things get back to a degree of normality?
No, I think we're going to continue to need external advice, probably more so in the future, as we try and reset our business into different areas. I mean, Brexit was one of those things where we really didn't know until January the 1st how it was going to affect us. And it has, in actual fact, affected us more negatively than we'd hoped for. So we are going to need advice in how we go about rectifying that situation. So I would expect our spend on external advice over the next 12 months will be at least, if not greater than it was in the past 12 months.
And Charlotte, I mean, from your perspective, do you see kind of demand for, the kind of services that you're offering? Is that buoyant? Is that growing?
Absolutely. I mean, if you like, if in relation to the past 12 months specifically, I mean, we've obviously put a lot of effort into trying to be here to support clients, and we've done a variety of tasks and really tried to expand our brief to kind of get them through it as much as anything. And we found that demand has been buoyant in respect of their interaction with us. Where it goes now, obviously, the continued requirement for various elements of service, for example, compliance and those types of things, is going to depend on results. But indeed, on the advisory side, I think I return to the theme that businesses that were strong and even businesses that weren't so strong, business wants to survive. Business doesn't start to try to fail. It starts to make a success, and it just needs the environment in which to do that. And I think people are looking for or happy to take external advice from those they know, trust, have value in, are recommended to. And I think there's a great idea of casting your net out and getting lots of different ideas of expertise, because lots of ideas make a better business than sometimes just one person. So I think that's something that's positively come out. Obviously, then the opening up of the economy underpins how quickly that happens.
And we've had a question from Sarah, or Sarah, apologies, who asks what areas might advisory businesses most need to innovate in the next 12 to 18 months. And I'm interested, Jonathan, obviously you've been talking a lot about the demand around kind of B2B SaaS models. Clearly that's an area of kind of innovation. What do you kind of draw any kind of trends from those kind of deals around the kinds of innovation that's targeted at?
Well, I mean, certainly obviously there's a huge amount of noise around workflow software, and I think any advisor who doesn't look quite carefully at their workflows to see what the impact might be is probably risking being asleep at the wheel. But I think what's noticeable about these software applications is they are platforms for people to execute on, such as the InsurTech business I mentioned, and I think an awful lot of advisory work doesn't work in that way. The really high value add stuff is no AI can too much. I don't believe any AI can touch any of it. So I think it's much more about ensuring that your humans have the best in market tools that probably are off the shelf, but possibly cleverly integrated. And then there are all sorts of crazy questions, really interesting questions about adoption. So it's no good getting a piece of software in and everyone hates it. So I think there is some. I think it's going to be it's a really interesting phase, but it's not. It's not. In my view, mainstream advisory is not in the middle of some kind of massive revolution.
Simon, any thoughts on that from the kind of client side? Do you see any areas kind of ripe for innovation in your engagement?
Yeah,
with
I think the idea
of
I think the idea of past systems is and moving to this online platform, and as you've said, Jonathan, that the remote working and all that kind of flexible working, those types of things, workflow. I think a main challenge actually is that companies often have a hybrid of systems in existence, some of which may have been built quite a long time ago and just kind of have been built on as Microsoft Windows, for example, advances. So all of a sudden, all of these upgrades, none of these softwares talk to each other. So you end up really having to make quite major changes to get all of your systems to talk to each other. So I think, and there's quite a lot of risk on that, the implementation side of it. They can be, I mean, Simon, you must find that, with a lot of aviation systems that probably go back donkey's years. And all of a sudden, you need them all to talk to each other. But gosh, that is the mission. So those types of things, and they're key going forwards. But gosh, that's tough.
Yeah.
Simon, any thoughts on that?
Yeah, I think from our side, we're not seeing a big need to innovate on the external advice side at all. Actually, it's really we're quite happy with the traditional way forward. But you're right, in terms of aviation systems and databases and things like that, it's